About 2 weeks ago, the cryptocurrency exchange FTX filed for bankruptcy, which sent shockwaves through the crypto industry. The company has since lost billions of dollars. But this collapse is much deeper than you think. So, what happened that led to this collapse? And what does the future look like for this company? In today's video, we'll tell you all about it. So let's jump right into it. What is FTX? FTX is one of the world's largest cryptocurrency exchanges, which lets consumers trade digital currencies in exchange for traditional money or digital currencies. The company is in the Bahamas and was previously run by Mr. Sam Bankman-Fried, who founded the company back in 2019. The company exchanges its tokens known as FTT, and through it became the fourth largest crypto exchange by volume as valued on the 9th of November. Now, Bankman-Fried has also founded a crypto trading firm known as Alameda Research. This is a detail that will come in handy later, so bear it in mind. FTX had previously been lobbying U.S. legislators to institute crypto-friendly regulation and had spent millions of dollars towards this goal. However, the business was built on a quite risky trading option, which are not legal in the United States and was subject to regulatory scrutiny across the globe. But the past month has been incredibly difficult for the FTX, following its collapse, which sent unexpected shocks to the entire crypto ecosystem. This collapse, however, wasn't a one-day event. Rather, it had been going on for what seemed like a fortnight. Critics say this might not be the end of the company yet, but at the moment, things look pretty grim for FTX. What happened that led to the collapse? FTX first came to be back in 2019, when the group's hedge fund, Alameda Research, already existed. Until recently, before the company's collapse, FTX was using FTT to make risky loans and was effectively trading by using company script. Now, FTT is a token that is effectively a share in FTX, which the company had issued itself and had promised to buy back using a portion of its profits. But the documents that were leaked to the news site, CoinDesk, suggested that the inside game was quite different. The documents that were revealed to CoinDesk did not present a pretty picture of the blurred funds of FTX and Alameda. CoinDesk reported on Alameda's troubled balance sheet on November 2nd, revealing its largest asset for billions of dollars worth of FTX. This led to a major holder of FTT and a rival exchange of the FTX known as Binance to declare that it was selling its holdings in the FTX. And this announcement quickly led to a rapid decline in the value of FTT in just a matter of one day. This was based on the assumption that FTX did not hold the liquidity required to back its transactions and stay afloat over time. With this development, the value of other coins such as ETH or BTC also declined. But that wasn't the end of it, because Bitcoin soon dropped to a 2-year low as well. On November 6th alone, the platform saw nearly $5 billion in withdrawals. And this was shocking for spectators, to say the least. A deal formed. On November 8th, withdrawals finally froze when a deal was struck. This included Changpeng Zhao, the CEO of Binance, and Bankman-Fried, the CEO of FTX, striking a deal for Binance to acquire the non-US branch of FTX. Both CEOs signed a non-binding letter of intent on that same day and promised that they would bail out the failing exchange to prevent a much larger market crash in the crypto world. Following this deal, that very day, FTX halted all of its non-fiat customer withdrawals. The CEO of FTX also took to Twitter to apologize for the current events and explain the matter of FTX liquidity while promising to be more transparent with the company and its holdings. For now, things seem to have calmed down, and FTX still seemed to have hope. However, this hope was short-lived, for what came next ruined any prospects that the company may have had. The deal falls back. On November 9th, the CEO of Binance, Zhao, took to Twitter to announce that Binance had completed its corporate due diligence and would not be acquiring FTX after all. He also tweeted that the reason for this was the alleged U.S. agency investigations into FTX and the mishandling of customer funds by the company. About this, Mr. Zhao said, "Every time a major player in an industry fails, retail consumers will suffer. We have seen it over the last several years that the crypto ecosystem is becoming more resilient, and we believe in time that outliers that misuse users' funds will be weeded out by the free market." In response to this, Bankman-Fried referenced Zhao's influence on FTX's fall through a crypto post on Twitter in which he stated, "Well played, you won." Bankruptcy declared by FTX. On November 11th, the company announced that it had filed for bankruptcy proceedings for FTX, FTX.US, and Alameda. The bankruptcy was filed under Chapter 11, which would allow the companies to reconstruct their debt and continue with operations, as opposed to bankruptcy filed under Chapter 7, in which assets are liquidated. Soon after, FTX.US also temporarily froze its withdrawals, even though earlier reassurances were given that it would not be affected by FTX's liquidity troubles. But the worst was yet to come, as FTX and FTX.US wallets were emptied on the same day in what appeared to be a hack. Over $600 million were drained from the company. Later, the company posted about the hack and called on consumers to delete their FTX apps, saying that opening the apps may download malware disguised as legitimate software, which is capable of stealing valuable information. On November 14th, the Financial Times published the FTX balance sheet dated November 10th, which showed almost $9 billion in liabilities, while only $9 million in assets. The balance sheet contained fake entries, which included a hidden internally labeled fiat account, which had a balance of negative $8 billion. At present, the company is under criminal investigation in the Bahamas. In addition, an emergency motion has been added to the FTX bankruptcy file on November 17th. This reported that there exists credible evidence that the Bahamian regulators gave directions to Bankman-Fried to gain unauthorized access to the FTX funds, which were then transferred to the Bahamian government. However, the motion has not been proven and remains to be seen. A new CEO. The new FTX chief, Mr. Ray, who was appointed on November 11th, described many corporate missteps, which included the use of software to hide the misuse of customer funds by the company. According to him, the financial statements assembled under the supervision of Mr. Bankman-Fried were also not confirmed to be accurate. As of now, the savings of thousands of customers who had deposited their holdings within the FTX platform are unsafe. So far, Mr. Ray's new team has recovered over $740 million worth of cryptocurrency, which belongs to various parts of the FTX business. But in Mr. Ray's words, the sum is only a fraction of the money he was hoping to be recovered. According to Mr. Ray, the failure is worse than that of Enron's bankruptcy scenario. This bears surmountable meaning because Mr. Ray was the one handling Enron's restructuring after its bankruptcy. So it seems Mr. Ray knows exactly how bad the situation is. What does this mean for the crypto industry? It is no doubt that the cryptocurrency industry has long struggled to gain the trust of its customers, investors, and regulators. This collapse, along with others of its kind, have paved the way for investigation by the likes of the Justice Department and the Securities and Exchange Commission to poke into crypto affairs. This time, it is concerning the FTX and its illegal usage of the customer funds to benefit Alameda Research. As of now, the price of FTT, which is the token child for FTX, has dropped over 90% since the start of this whole fiasco. In addition, the price of Bitcoin is down 19% this month, and that of Ether is down 24%. From this evidence, it is no doubt that the ripples of this crash have traveled far and wide in the cryptocurrency industry, and its effects have been felt throughout the cryptocurrency industry landscape. In just 1 week, FTX lost billions of dollars, went bankrupt, and got hacked. If that wasn't shocking enough, consumers, regulators, and investors' trust also suffered a massive dent subsequently, many of whom have lost their valuable money in the process. Does this mean a new era for the crypto industry? Or will crypto jump back from yet another failure as it has done time and time again in the past? The future will tell. What do you think? Let us know in the comments below. If you like this video, please give it a thumbs up and subscribe to our channel for more videos just like this. We'll see you in the next one.